The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigers that are growling and prowling out here with us. Right now, we have the Dow Industrials up 72, Nasdaq's up 5, S&Ps are up 7, gold is up $8, trading out at $17.40. We get silver at $33.82, bonds are flat, well, 3 ticks at $149. Dollar, they're whacking the dollar again. Dollar's down 38 ticks at the 79.95, and the euro is at 128.38. And that dollar looks like it's going to come down to that swing point down there.
Yeah, it is. It's going to come down there. It's coming down and testing the bottom portion of that channel line out there. So 79.86, right now should be the area where we'll see if it can hold here.
So we have tomorrow, there's a huge...
we got stuff everywhere.
Oh, baby. Okay, so you have the Supreme Court in Germany coming out tomorrow, and they're coming out, and they're going to... What it's about, folks, is this. They're going to do a ruling on whether Germany can participate, or it's legal for Germany to participate in the European Stabilization Fund, which basically is the permanent bailout fund. That's what that is, which is really wild, okay? And so we'll see where that shakes and bakes. Then what we have is that we have the Fed Wednesday, let's see, tomorrow's Wednesday too. So the Fed starts tomorrow.
That's right. So
then on Thursday it comes out with the announcement. And then, of course, you get Apple
that's right. So you get iPhone 5 tomorrow. I think that's tomorrow, right?
You can start ordering them tomorrow, right?
Okay.
And, I was listening to you in your show, and there's no doubt, you had actually, when we were on yesterday morning, the selling started on Apple.
It did.
And it expanded dramatically. Now, what you had yesterday, now this is the first time, folks, that I've seen this in a long time. And what you've had is this. You had selling in Apple, you had selling in Intel, you had selling in Boeing, and you had selling in 3M. And it came out of nowhere.
Yes.
I mean, so there was a large fund that was unloading, and they were basically hitting it pretty hard.
And that's really what I was pointing out to folks on this morning's shows. You take the intraday chart of Apple.
Yes.
And one of the things I look for is kind of a signature when you see this. When you see just simply a linear line like this.
Okay.
And on basically relatively controlled volume.
Okay.
Some prop desk got the instructions early in the morning.
Right.
I want you to be done with. I want you to sell X number of shares.
Right.
I want you to control price and be out of it. It looked to me like I want you to be out of it by 3:10.
Right.
And have your work done for the day.
Oh, yeah. No,
it was very controlled. When you start to see those linear lines like that,
right.
and
let
so...
it pop up a little, giving them more. Pop up a little, give them more. Pop up a little, give them more.
Yeah,
right.
Yeah.
There's no doubt about that. If we take a look at the, if you go, now watch, if we go over to 3M, you take a look at 3M, and, it wasn't like there was news in this baby. Bottom line is that...
Wow.
Yeah. Oh,
wow, I didn't see that.
So picture this, folks. You had made a high in 3M the August 17th. He did that, $94, 3 million shares. It tried to test that high on Monday with 3.2. Guess what? It blew out last night, yesterday with 6.3 million. And what's sticking out right down there is that 85 level. Now, Intel, and this is where, if you pay attention to how the market talks, walks, and squawks, okay?
Yeah.
That it says quite a bit. Intel had already told us you get an ABC structure on the way down. But, of course, the market is so deviant that what you had is this. You broke the B point. You did that on August 29th. Okay? Well, guess what? You do a counter-trend bounce, and it made a complex ABC. Had no juice. If you still paid attention, had no juice. But you know what? Intel did go from 24.15 all the way back up to 25.10. Not that that's a lot, but it really is a lot when you think that, okay, we're going south. Well, guess what? Boom. It blows out yesterday. Well, 2 days in a row, if you want to see.
That's right.
Does 86 million shares on Monday. they don't kill the price, though. Tuesday, kill the price.
Yeah.
What day is today?
That's Tuesday.
Oh,
no,
okay.
so Friday. So Friday. Yeah, Friday.
Friday, 86 million.
That's right.
Yesterday, 80 million. Bottom line is that you get a large ABC. Well, it was a 4-point ABC down.
Yeah.
Now, what you have with Intel, and this is where it's going to get wild, is that Intel right now is going after the $22 area, but once you get back inside 22.83, which we're getting close. That puts game up down to the very end of the consolidation. Not quite the end of the consolidation yet, not the 17, but it puts the 21 in play.
Yeah, yeah. It's got a string of potentially some support at the 24, 23 level, 23.80 level, or what have you. You got to see how it comes down there in volume, though. No
doubt.
Sure.
Now the euro, we're at 128.31, and that 128.24. Well, actually,
129 and then 131 is where I think its eventual target is. Doesn't have to can do a straight line move up, but the large commercials are they're in there. They're in there buying the euro and pushing the euro around to the upside, and it's a heck of a short covering rally going on.
Yeah, I figure. See, I don't figure it's a short cover rally. I figure what you figured last week. That you get Draghi and they just get the central. You get the central bank's buyers.
Yeah,
you know what I mean?
Yeah, for sure.
I mean, because you know what I'm saying. It just this is one of these deals, folks, is that they just want to suck more people into it and blow your brains out.
Yeah.
Okay, because the euro there's nothing there. That's the Spanish Prime Minister, right?
Yes.
He's a piece of work, man. This guy's a trip. So he was coming out with one-liners yesterday, folks. I don't know if he was coming out with one-liners. One-liners were coming across the tape, and I think that's why actually in the afternoon about 2:30 the selling started picking up because he was coming out with the aspect of this. So check out. So the way that the bond buying goes is this, folks. Okay, they come out and said they're going to buy the bonds. As soon as that happened, okay, what happened with the Spanish rates, they get down 2.5%.
Yes.
Short-term rates.
Yes.
And we were talking about that, okay, you can push as many bonds out as you can, and that would be the smartest thing to do. Well, sure enough, that's exactly what's going on. They're pushing them out. But he was coming out yesterday saying, listen, no one in the European Central Union has talked to me about asking for help.
Yeah.
Okay? Yeah, so it's hilarious. I mean, do you know what I mean? It's like, folks, Draghi's made 100 comments that, listen, the Stability Fund account, which they're going to rule on tomorrow at the German Supreme Court, the only way that he is claiming that they're going to give anyone money is that someone has to ask first. Now, the reason for that, okay, so think about this.
It's not a no strings attached deal.
Oh, it's
not just ask.
It's a slavery attached deal, folks. Let me tell you something. They're going to put the shackles on them. They're going to hold. This is just a banking structure. Period. Okay, you want to get wrapped up, tied up, strung up, all of the above. You got.
Come on into my store.
Come on.
You're never going to leave.
We're gonna take care of you. We got 8,000 different ways to tie you up, and they're going to tie them up to make sure they get their own money. They'll take their resources. They'll do anything and everything in order to get their bread. Bottom line. That is out there. Now, what has happened is this. Now, this is pretty interesting. Not only the sovereign governments, right? But I looked out here today. The issuance of debt just in the last 3 days in Europe went to all-time highs.
Did it? Okay.
Even for all companies.
Okay. Oh, really?
Yeah.
Okay.
Yeah, so which totally makes sense. I wasn't thinking about that, though.
Okay.
So what you have is this, folks. Because it brought the rates down, and it brought them down not only with the sovereign, debt, it brought them down for corporate debt.
Yeah.
So what you have is that this will be, let's see, man, we're only in August, right? No, it's September. So what it already did in 3 days, it already surpassed all of last year.
Oh, no, really?
Yeah, that's how quick they're pushing it out.
Wow.
Right.
How about that?
Right.
Okay.
So what does the good thing here? What does happen is that their balance sheets are gonna. A lot of balance sheets are gonna. It's free money.
Yeah.
So we'll see whether they end up spending it. But the bottom line is that there's nothing like all of a sudden 1 second you have debt on your books that you're going to pay in the next couple of years. The next second you push that off for 2 or 3 more years. you get an interest rate on a short-term rate that's 2 or 3%. Could you imagine? I mean, that's
no,
big.
No, it is. It's very big.
Depending on where you stood at certain times in your life, folks, that is huge amounts of money ASAP, and for...
Well, especially if you got a business where you're bringing down to the bottom line 8, 9, 10% or something like that, and you're saying, hey, what's this? This is a great trade-off.
Oh, big time.
I'll take this debt,
right?
Even if I don't have any use for it right now.
Oh, big time.
Okay, let me take this on, because how much lower can it get? That's
right.
Okay, so you're like, this is good, and I've got it, and if the opportunity,
that's the kicker.
Yeah, if the opportunity cost was okay, I didn't use it, I still got to pay it back, and that's an easy business decision, right? Yeah,
that's a no-brainer.
Yeah.
877-927-6648. Let's take a look at some of the high-volume stocks in a low-volume market. You got AIG down 46 cents. So the government made $12 billion so far on AIG.
Okay.
Plus they still own 22% of the deal.
Yeah.
So what's going to happen there, that Greenberg is still going through the courts with them.
Okay. Yeah.
So that's going to be a bloodbath. That's going to end up being a bloodbath. And one of the main reasons, of course, folks, is that he is going to basically say, rightfully, maybe, that, hey, listen, the government didn't know what they were doing when they were coming in on me.
Yeah.
And, he was claiming right from the very get-go that, you never should have done this, should have done that. Well, bottom line, they show within 4 years they've already made money, and they're going to make more money. So we'll see where that shakes and bakes. Freeport-McMoRan's flat. You got, this one's interesting. Okay, now Tibco Software. I heard you mention this before, but this is important. This, folks. Okay, so check this out. It's TIBX, but the reason you want to watch this, and this is funny. This has to do with cycles.
Okay.
In the market versus not just it has to do with the stock also, but this is what it is, folks. This stock has been around a long time. Here, if I bring this back 15 years, what you're going to see is this. This used to be one of the big high flyers. Yeah. Okay, I'll bring it back 20 years. Now, this is what I'm going to bring up right now. So this is what's kind of interesting. So this equity, started off at $6.99, goes all the way up to $147, and then crashes. Okay, crashes down to $4.
Man,
right?
Oh man.
So I heard you at this morning. So picture this, and I know these. I don't know the cycles, but you've been doing this so long. I know when, for some reason, when some equities start moving, the bells go off, man. It's like, okay, hold it. What's going on? And they're just little clues. And it's like, when I heard you say Tibco, I pulled it up. And the reason being is that Tibco has started a lot of downdrafts in the tech industry.
How about that?
And what they do...
The Qs, certainly were giving us some signals yesterday.
And, so you got it down, 10, 15% right now. So when you bring this back... The first thing I did, I says, okay, what kind of retracement did? Well, guess what? It did what the market's done. You're talking a triple top up
there. Got it, yeah.
You stay right there, folks. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling with us out here. We're going to be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. And, folks, as you're over at TFNN, okay, we have a special promotion going on right now. And the way it works, the Tiger Dollar deal, if you get any subscriptions right now at TFNN, if you're looking to get any in the future, this is a great way to make either 20, 25%, or 30% on your money. And the way it works is that you buy 500 Tiger Dollars, you get 600, you buy 800, you get 1,000, 25% bonus. If you buy 1150, you get 1,500, a 30% bonus. That promotion, if you take advantage of that promotion, what you also get is I'm going to be doing a Master Trader series on the 5th of October. That is the next unemployment, the employment numbers that do come out. We're going to be trading and teaching for 5 hours live. This is the last time, just so you understand, that we are doing the 20, 25%, or 30%. So you have until Sunday to check it out. If you do happen to be in the Florida area, Orlando or Tampa, St. Pete, as you're over at TFNN, Nadex is sponsoring a workshop. We're going to be doing a live workshop at the Grand Hyatt. And it's absolutely free. You can sign up for right in the front page of TFNN.
Yeah, Saturday morning, September 29th.
Thank you.
Yeah.
29th, and that's from 8:30 until noontime. And as you're over there, one last thing. Under breaking news, if you want to read a white paper about real estate in Florida, check it out. And there's a lot of great facts in there in general, but it's something you may want to check out.
If you want to see Tom's polished horns, go get the report, the bull market, the bull market in Florida housing.
See, folks, I had 2 horns when I started this, okay, but now I have 7 horns.
I love it.
Okay.
I love it.
Well, you know, it's wild. So think about this for a second. It's pretty wild, actually. Do you know what I mean? Because depending when folks have listened to me, do you know what I mean? I've been a bull and a bear and a bull and a bear.
Sure.
But the reality is that I've been a bear for quite a while, okay? And, well, it depends what market, though.
That's right.
I was a bull.
That's right.
And you know, gold, beyond belief. And bottom line is I'm a bull in real estate right now.
Yeah.
So you can pick your choices. And my choices have come down to, folks, what I love about that trade is that trade, I'm buying something 50 cents on the dollar.
Yeah.
And that's the bottom line.
That's right.
So it's like, you know, if you look at your risk and money management on that trade there.
And something there will always be a demand for.
Not only demand for, it's in Pinellas County, you're built out.
Yeah.
We're built out.
Yeah.
It's, in Pinellas County, folks, there's no more land to build. So that makes a huge difference. 10,000 square feet. If it's 10,000 square feet on the water, well, you're talking $500,000 with nothing on it.
Yeah.
10,000, that's nothing. It's a joke.
That's right.
And that is down. Now even the lots that are there, those lots are down more than 50%.
Yeah.
Because that lot there was 1.2.
Yeah.
The ones we're talking about. But you won't see that for a long time, because what has happened is this: is that the larger loan market is starting to open up.
Yes.
Okay, but I suspect it's going to take another couple of years for that part of it to open up. So what you have is that anything 417,000, even up to 600,000, is pretty easy. Over that, different ball game right now. It's opened up. It's opened up dramatically. It's almost doubled since last year. But I'm talking about really opening up, and I don't see that for another year or something. The money's out there, but what's not out there right now is the confidence.
Yeah, you got the confidence, you got the reward factor, the risk factor,
Right.
Especially with interest rates these low. You want to make sure that if you are loaning those types of funds, you want to make sure it's solid behind it.
And what does happen is that you got to make sure the tax structure.
Yes.
As soon as you get up to those levels, the tax structure. What does happen in Florida is that if you live in the house, we have a homestead deal, which is dramatic. This is what it's pretty wild when you live in an area, folks, that a lot of tourists come in, because what happens is that these politicians continue to ding the tourist.
Yeah.
In a huge way.
Yes.
And that pays for quite a bit, because we don't have a state income tax, but what ends up happening, we don't need one, because the amount of money that comes in that they generate from the hotel tax.
Yeah, different resort taxes. And,
we know.
Like 3, 4, 5 lines on
listen
it.
Folks, when Natick sponsors this thing down at the Hyatt, okay, if you want to understand, it's big money, okay?
Yeah.
So they sponsor it, but then what ends up happening is that so you get one bill, but then they're going to get another bill that's 24% over that bill.
Just
for taxes.
Oh my God!
But that's why we don't have any state income tax, which is pretty cool.
Keep coming on down.
That's a beautiful thing. With 5 million visitors in Pinellas County,
Oh, that's
5 million.
That's cool. That's
Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us right now. The Dow Industrials are up 66. Nasdaq's up 4.5. S&Ps are up 6.5. You stay right there. We'll come right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
That's what I always do. Exactly. Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, the Dow Industrials are up 61. Nasdaq's up 4.5. S&Ps are up 6.5. We get gold up 6. You got bonds flat. King dollar down 37 ticks. And the whole world is going toward the euro. Wrong. Not even close. Pretty amazing, though, no doubt. Let's take a look at some of the large caps out here. So you have look at the Caterpillar. Caterpillar's the ones that go downtown, but you know some of these bounces are pretty good. Caterpillar's up $1.27. ExxonMobil's up 31. That wouldn't crack yesterday either. Remember the XLE almost cracked, but it just didn't crack yet.
Yeah.
Disney was up 9. Oxy's up $1.13. Big Blue's up 89.
Now, McDonald's, they released numbers, I think, this morning.
Yeah.
I didn't get a chance to look at the stock chart or their numbers, whatever they came out with, or maybe it was just same-store sales. I don't recall what. I don't know.
What they're doing now, they're basically, you know, getting China fat and getting Australia fat.
Oh.
That's the bottom line. Is that the stores? Let's see. So the sales went up, I believe, in both of them.
Okay.
Let's see. Here we go. Okay. So McDonald's Corporation said same-store sales rose. Yeah, there you go. 3.7% in China and Australia. That makes, I mean, they're just, let's see, no, that's same-store sales. No, it said sales. Open at least 13 months. Yeah, it rose 3.7%. Those poor people, man, they're not going to know what happened to them. One second they're skinny, the next second they're going to be
running
around. So Weight Watch is going to be coming in there next.
Sure. Now, the difference that they do have over there is that the general mode of transportation is called your feet.
Okay.
So whereas in the United States you drive to McDonald's,
right,
grab a Happy Meal,
right,
or whatever,
right,
and eat it in your car on your way back to the office,
right.
You're not working off any of that calorie content,
right.
So and you take like China, it's primarily rice driven, as your primary staple. That'll be good enough to plump you up too if you just just eating rice. But you're just simply walking everywhere.
Right.
Really.
Which is huge. Moving around huge.
Yeah. So I think that helps a little bit more to offset versus what we've got here in the United States. Other than New York City, New York City, you walk a bunch, right?
Yeah.
Absolutely. Boston, was Boston a big walking city
Boston's
or not?
a big walking city.
It was also.
But I can tell you, the difference depending, I can tell you this, when you go around the country, what was really cool is that when
you were over on the West Coast in Denver, right?
Well, yeah, Colorado. You folks in Colorado are so healthy, man. It's inspiring. It really is, because when you go out there, it's like, man, you feel crazy if you're not out, and it totally makes sense. But they're outside, they're doing something.
Yeah.
And I really was, and that was everywhere. And I should have realized as soon as I got there, everyone had a backpack on.
Yeah.
Right? I'm saying to myself, what are all these old people doing with backpacks on? No, really. Do you know what I mean?
Old hippies, that's
No, that's the first thing I thought of.
Yeah.
But the reality, which I really found out, that they're healthy. They're out there moving around. So it was pretty cool, man.
Yeah. Well, it's that moving around. You go over to, if you take a look at the foods that they eat, over in France, spent time over there, and, everybody's walking. You're just walking from one place to the next.
And they smoke a lot of cigarettes over there, don't they?
They've got a version of chain smoking over there, not as bad as in Asia.
They get something going on right, though. They drinking wine, they're eating, I love bread, but, after Nico there, I don't eat bread anymore, okay? So, but just smelling those baguettes.
Oh, it's nothing,
Baguettes, wine, and cheese. Do we have to work today? Hold on. I think it might be time for. Let's go out to Napa Valley for a few minutes.
Oh man, yeah, that would be.
All you folks out in.
Well, that's healthy, isn't it? Because it's mostly grapes.
Well, you know what? Right now, everyone's going to work in Seattle and Portland. Maybe let's see, what time is it? 7:30 in the morning there. Maybe, see, these guys, they can divert themselves right to those vineyards right now.
Oh, yeah. This time of year, I think, is when they're also picking.
Oh, that's right,
I think September, October might be just a little bit early, but I think they're picking the grapes. So.
Oh, man, I'm in trouble today. Okay, day's just starting. Beautiful thing. No doubt.
Think they'll let us in? We'll go to the Camus.
Well, you know where we can. Yeah, I know where we can get in. In fact, I know where we can not only get in, but they'll let us do the grapes, is the Marion.
Oh, that's right.
Peter Marion.
That's right.
If you're out there, folks, Marion Vineyards, Peter Marion, he's a great guy. I mean, I've had him on a few times. Actually, when I
it's good wine.
When I did the first book, the second book, we broke it open, and he came in from California.
Yeah.
But yeah, I just talked to him actually because they're starting their deal, and the way all those wine rooms do when they do that, whatever they call it, bringing that's when they have all those big times out there. They show people how to do it.
For sure. Yeah.
Go back to.
I think TFNN Live from we're just going to do them. We'll go hit one each vineyard.
Yeah,
we might end up being out there for a couple of weeks.
Oh my God!
It'll be a great 4 to 6 show.
It would. Oh, there's no doubt, man. Holy cow!
And the 9 a.m. start might be a little tough for me, but
4 to 6 would be good because that's actually 1 to 3. That'll be all set.
Just prime us up for some good bread, cheese, and wine.
No doubt.
That'd be a good staple, wouldn't it?
That is a good staple. I think it is a good staple, no doubt. Let's go take a look at that gold contract. Gold out here. This little baby, I think what you're going to see here is it's going to be the spike. I mean, so picture this. You got that Supreme Court tomorrow is going to be a big deal.
Yeah.
Okay.
Do we know what time that's supposed to?
No, but you know what they try to do? So listen to this. A politician today tried to basically he wanted it extended. And the Supreme Court said, you're out of the mind. We're not extending it.
Yeah, okay.
But what it will do, well, let's put it this way. If they say no, that's the only thing I can see that can really crack the market.
Yeah.
If they say yes, the market's already figuring it, okay, we know we're going to do that. But I believe that that's where the spike's going to come in gold.
Okay.
The spike in the gold, the spike in the dollar, spike in the euro, that's what's going to have happening in the next 72 hours.
Yeah, okay.
Because of the aspect.
And the spike in gold, do you think it'll spike it beyond 1772? 1775?
Well, if it is the spike, yeah, it will.
Okay.
Because what happens with a good spike is that it likes to, it'll go more than we think it's going to go.
Yeah.
But then it'll only stay there for a second. That's the problem. You get up there, you spike it, and then that's it. And that will be it again for another couple months.
Yeah.
That's what happens with spikes, folks, okay? You don't want to see spikes because spikes don't last. The spikes are fast dash.
Yeah.
Wicked acceleration, right?
And exhaustion.
And then done.
That's it.
And done. Do you know what I mean? So we're already into that bar in a big way. We're at 1733. So when we came down, folks, we came down from 1792 to 1688 in one day.
Yeah.
Okay?
Yeah.
So bottom line is that, coming back up the other side is just as easy.
Yeah.
You know what I mean? On particularly when you're looking at the type of news that we have running. Now, the volatility index, this is a big deal yesterday. Now, and Victor Jones, folks, from TD Ameritrade, he's going to be coming up today at 12 o'clock. He brought up a great point last night, is that, and what it was is this, folks, the nervousness in the market yesterday was tremendous.
Yeah, absolutely.
Okay?
Absolutely.
Which makes no sense because we didn't even, the market didn't even sell off. I mean, give me a break. But let me tell you something.
The internals. It's the internals.
Yeah.
It's the internals where you saw the nervousness.
Oh.
That's what, quite frankly, what I focused on in my newsletter this morning for folks was like, ooh, look at this.
No, it did. Because you can go back, folks, and, when you look at the VIX, so the VIX is just, what the VIX does specifically, folks, is this, monetarily. What it does is that when the VIX goes up, the market makers want more premium for anything they're selling, okay? Well, let me tell you something. The VIX basically went from a price point of $13.97 to $16.28, and the VIX were at highs, and yet the VIX is dramatically higher by about 15% than it was in the middle of August. So that's saying that there's less complacency out there, and the real key is going to be, okay, why? Folks are basically positioning themselves. So
yeah.
Apple's got volatility in this morning, man. Apple's gone from $5 up to $1 up, $5 up to $1 up. I mean, someone's having a field day with this thing.
Yeah.
Totally.
Well, I was looking at the VIX, and I didn't hear Victor's your interview with Victor last night. But what I was showing, I can't pull it up on my screen for some reason. But if you just simply were to draw just simply a trend line off of the low of the VIX to yesterday, you see it moving. In essence, you see it moving up.
Okay.
And if you were to go ahead and take a look at the S&P, okay, it wasn't in correlation. The correlation wasn't, if you just simply take a look at the way that price is behaving out here, and so there was just simply a correlation. The VIX should have been pulling back.
No, that's good. Here, you know what I'll do right now? I'll put the VIX up with the S&P.
Yeah. And there's been a couple times here where the correlation just simply was, it's just a slight little nuance here,
right?
And I was also taking a look at the bonds. Bonds were pulling back yesterday, and and the question was, boy, there's nervousness out there on, there's another $20 billion or so that's supposed to come into the market tomorrow, I think it is, today or tomorrow.
Right.
And, just nervousness out there on what's going to happen in Germany. What's going to happen? What is Uncle Ben going to be doing?
Yeah.
With us being up at these highs.
Yeah, well, and I guess that's going to, and this is where...
you're at 13,326 on the Dow.
Oh no!
How far away are you from the highs in 2007?
This is where the reading comes in from, what the Fed has said and what do they mean.
Yeah.
And that's where what you had with that last reading, folks, is that it was saying many, and they never said, okay, how many is many Fed governors? And then he got into the aspect that, hey, listen, this jobless deal is something that they're concerned with.
Yeah.
And the case being laid out was that, the QE does get either 0.2, 0.3, or 0.4% off of the unemployment rate. Yeah. You know what I heard this morning? So check this out. This is pretty good. Now, this is pretty amazing. Well, it's not amazing, but it's the way that, unfortunately, things have been going in states. And what it has to do with is the amount of people that are retiring on disability.
Yeah.
And, you know, if you get a disability, folks, God bless you, and I'm sorry that you do, but the amount of fraud and disability is tremendous.
We're not talking about people that are really disabled.
Yeah,
we're talking about people taking advantage of the system.
It's huge. Yeah. It's built into the system. That's the thing that's amazing, is that it absolutely is built into the system. And I'm going right from whether in the bureaucracy, it's built into the system. It's built. This is how sick it is actually in the state structure, a city structure, a federal structure. I don't know the federal structure as much, but I know the states and the city. It's built in there, including the bureaucracy that's there. Because inside that bureaucracy, they want to basically go do it. And I heard this guy this morning on Bloomberg, and he was bringing up a great point. He says, listen, that structure there is also hurting the longer term. They're just trying to get employment down. But the bottom line is that those people will not come back to work.
Right.
Okay?
Right.
Because they're going that route. And that's pretty wild. I mean, you know, and it's not the route to go, I can tell you that, but, you know.
Yeah. Well, any QE is not going to solve employment. It's not going to solve the employment issue. Right. Not even going to come close.
Well,
not even close.
Oh, here, hold it.
Even
you know, we're talking about demographics. I got to see if I can find this demographic. Wait to hear this demographic, folks. And if you go look at that paper I did on the real estate, what you're going to find is that I have the demographics in there, and one part of the demographic is that, you know, the baby boomers were the biggest amount of people, period, on the earth. Well, guess what?
Yeah.
There's a new baby boomer, and it's actually bigger. And that baby boomer is from the 32-year-olds down to the 13-year-olds, okay? But listen to this. I got to find this other one. There's another demographic. No, I saw it this morning. And so listen to this one. This one's a trick. I gotta put the chart up, and I got to find it first.
Yeah.
So this is what this demographic is. The demographic between 32 and 39 years old.
Yes.
Right? Is at its lows.
Okay.
This month. This month. Guess when it was at its highs?
2007?
1999. 1999. Okay. Now, guess what? That demographic is going to be moving up to its highs.
Yeah.
Okay. And it's about another 7 years. But that demographic put together, I'm going to make another chart, because I made a chart with this morning. I should have saved it. And so what I did is I made the chart with an S&P with a demographic to see the correlation.
Yeah.
Direct correlation.
That's pretty cool.
Direct correlation.
That's pretty
cool. So I want to do that one, but then add on top of it the other demographic, meaning the 32. The bottom line, folks, is this, is that the waves that are coming of people,
Well, you talk about that because it's really kind of like cycle analysis,
right?
You know, is what you're doing. Just like in the real estate, the bull market in Florida real estate report, where you take a look at cycles there.
Yes.
I don't know if you included those charts or that chart.
They're on there.
Yeah.
Yeah.
But if not, I mean, people need to go over and grab that report.
I held a couple of those back.
I wasn't sure. I was just.
I did. Yeah. I had 50 charts, folks. And let me tell you, I'm not going to give it all.
Yeah.
I did.
Well, everybody that's part of the Tiger Fund, though.
Oh, yeah.
You got that.
No doubt.
Yeah.
Listen, folks, don't forget about Tiger Dollars. You want to save or make, actually, bonus 20, 25, or 30%. Check it out on the front page of TFNN. We'll come right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us. Don't forget, folks, the Tiger Dollar promotion, it is over this Sunday. If you do want to make 20, 25%, or 30% bonus on your money, you can check it out on the front page of TFNN. And this is the last time that you'll be able to do such a thing, meaning save 20, 25, or 30%. If you happen to be watching Tiger TV, what you're looking at right now is you're looking at the demographic I was just talking about, meaning the correlation between the S&P and the number of Americans. I thought it was 32. It's 35 to 39. If you're not watching it, we'll explain it to you. And what it is that this had peaked, folks, in 1998 and 1999 when, you know, the S&P was up there at all-time highs, okay? It's been going down since 1999. The demographics. The demographics,
Yep.
okay? And so the reason we'd be going down, of course, is the baby boomers are all going up.
For sure.
Okay?
For sure.
Now, the same demographic that I've basically been talking about, right?
Yeah.
So this is the larger part of the demographic, which is really cool, okay?
Yeah.
Because the ones I was focusing on for the real estate market were the demographic from 32 down to 13.
Right.
Because you're going through these cycles.
Absolutely.
They're coming into their, they're getting stable at 32. That's what it comes down to. Well, bottom line is that this one's a trip, man, because the number of Americans from 35 to 39, we've just bottomed. It's actually
it's cool chart, really cool chart.
Yeah.
In fact, folks, if you're listening to us on the radio, just go to the archives of Channel 10 and catch this show later on today.
Exactly.
Yeah.
And so what you have here is that the demographic from this point on. Okay. Now check this out. This is what's really a trip. From this point on, going all the way out to 2029 goes up.
Yeah.
Goes up. That's pretty intense, man.
It is.
That's
a good chart.
Isn't it wild?
Yeah.
Oh,
you need to.
I'll save it this time. I'll save it this time. Exactly.
That's
exactly. There's. But what I'm going to do with I'll lay on top of that one the next demographic. See that next demographic is even more, just as dramatic.
Yeah.
Because now what you do, so that's 35 to 39. 32 to 13 is a larger demographic than the baby boomers. That in itself is,
Yeah. Boy, they're struggling over in the retail clothing sales area. Burberry. Ever have any Burberry stuff? They're getting just absolutely hammered this morning. Now, to follow it on the U.S. stock chart probably doesn't give it a whole lot of as much relevance.
Man. Wow.
But on the London exchange, it's down 19% this morning. $35. But on the UK exchange, it's probably
let's bring it right up, right on that Burberry exchange. Look at this baby. Okay, so we are trading. Look at this thing. So it's down
about volume
286 pence, right?
Yeah.
Now let's bring this back. So this is what's really cool. So first, okay. So look at this. Okay, folks. Any place, any time, it doesn't matter.
Right.
What do you have?
You have high volume.
You have a high volume low.
That's right.
Okay, they sucked everyone in. This had a high volume low. There's two of them. Has a high volume low going all the way back at 1,034. Guess where it's going? 1,034 pence. Yesterday it was out at 1,400.
Yeah.
And now let's bring it back even further. This is just crazy when this happens, man. Oh yeah, this is done now. A whole baby.
Look at.
No, this is not. This is not only this high volume low has been sticking out since October of 2011. So it's going to be it's croaked.
Yeah, and it says the week. What time
I just put that. I put that on a weekly.
On a weekly, take a look at the volume today.
Going
it's only
2 years.
Tuesday. Yeah. So it's going to have big time volume.
That's a weekly going 2 years.
Yeah.
And when you look, if you're in the car right now, what's happening, folks, is this: it's a huge top that has been out there since let's see, July of 2011. And it's whacking every swing point. This time, O'Brien and Steve Rhodes. Bottom line, Kate Stalter coming up next. Victor Jones, Daryl Martin, David White, Ken Shreve, and back here.
Have a great day, folks.